Hello, and welcome to 7 Steps to Guaranteed Hard Money Loan Approval, brought to you by the legal and mortgage professionals at hardmoneybankers.com. This report is provided to you free by Hard Money Bankers, LLC. Please do not distribute, copy, or reproduce without express written consent from Hard Money Bankers or its attorneys. The goal of this free report is to help you understand how to get the most out of your relationship with your hard money lender, how to make yourself and your loan irresistible to your hard money lender, and how to take your real estate investing to the next level. Some key points included in this report will be: what is hard money? Who uses hard money loans? What do hard money lenders do? How does a hard money lender evaluate a loan proposal? How do you guarantee loan approval? And also some insider tips from the front lines. Hard money is technically defined as a conservative loan made against hard assets. A hard money loan, also referred to as equity-based loan, private money, special circumstances financing, or a bridge loan, is a loan that is offered when a conventional loan may not fit the borrower's lending needs. This generally happens when a borrower needs money to act on a hot real estate deal, but does not have time to wait for the stringent and sometimes lengthy underwriting processes associated with conventional loans. These loans are typically outside-the-box type deals and require creative financing to help real estate investors fund projects where conventional financing may not be right for the circumstances. Hard money loans are typically fast, flexible, and can go as high as 65% loan-to-value based on the after-repair value of the property. For example, if a house will be worth $100,000 after a complete rehab, a hard money lender will usually lend up to $65,000. Thus, if you can purchase the property for $40,000, not only could you get the acquisition money, but also the $25,000 construction money. The capital for a hard money loan is generally acquired from private individuals or small companies willing to lend out money for these types of creative deals. Most banks and other financial institutions do not fund hard money loans. Hard money can be utilized in both residential and commercial real estate transactions. Interest rates and points are usually higher with a hard money loan than a standard conventional loan, because the risk of default is deemed to be higher with these types of loans. However, if the real estate deal is structured properly, those higher costs can easily be absorbed into the deal, making the transaction a win-win for both the borrower and the lender. Interest rates paid by borrowers for hard money loans typically range from 12 to 18% annually, and the exact rate will depend on many factors, including the type of deal, the strength of the borrower, and the current supply of private money available at any given time. Hard money loans are traditionally used by non-bankable borrowers, or borrowers who require more flexibility than a bank or other conventional lending institution can offer. Many real estate investors or property owners will utilize a flexible hard money loan if they have limited time to close on a deal, have an unfinished or unstabilized property, or need short-term bridge capital to carry them through a rough patch. Other candidates for a hard money loan may be those investors or property owners who have some assets or savings but cannot qualify for conventional financing due to financial hardships in the past, such as foreclosures or bankruptcies. Hard money lenders, such as hard money bankers, will work with borrowers who need access to quick and easy capital and can provide flexible underwriting as well as construction money on rehab projects. Because hard money loans are not subjected to the same strict lending guidelines and regulations as conventional loans, they can be closed much more quickly and with much less hassle. Hard money loans can be utilized for several types of real estate projects, including building acquisition and rehab, land acquisition and development, investment properties, emergency cash out, quick property takedowns, low loan-to-value loans, short-term flip properties, non-bankable transactions, foreclosure or bankruptcy bailouts, self-employed or cash-strapped borrowers, credit-challenged borrowers, residential or commercial properties, and any short-term financing related to real estate. Further into this report, we will explain how to structure your deal and make your loan appealing to the hard money lender, but first let's look at some of the basic lending guidelines for hard money loans. Although there are many different types of hard money lending programs, the following can be used as a general guideline for determining whether your situation would be appropriate for a hard money loan. Remember, because hard money lenders are very flexible, these are not hard and fast rules, just guidelines. So even if your situation does not adhere exactly to these guidelines, you may still feel as though you have a good project. If you have some compensating factors in your deal that overcome weaknesses, the hard money lender will be able to assess your deal and determine if it is one that fits the criteria for a hard money loan. Here are some basic hard money bankers loan guidelines. Loans are usually up to 65% loan to value based on the after repair value of the property. 100% of acquisition and construction can be financed. Both residential and commercial properties are permissible. Low credit scores or no income are acceptable. Hard money bankers welcomes foreclosure and bank-owned REO properties. Interest only and no payment options are available. All loans must be for business or investment purposes. Hard money bankers does not lend on primary residences. Hard money bankers can handle cash-out refinances of land or existing structures. Unlike conventional lenders that use complex credit score and income formulas along with volumes of strict underwriting guidelines, hard money lenders utilize basic, flexible, and common sense underwriting to analyze each deal. Every application is viewed from many creative angles to determine whether the property and the borrower are properly suited for a hard money loan. Different hard money lenders look at different things and different types of deals. Make sure to understand what types of deals your hard money lender is looking for. So what is common sense underwriting? At Hard Money Bankers, we follow the time-tested evaluation of the 4 C's, being collateral, character, capacity or exit strategy, and credit. Let's take a look at each of these from the eyes of a hard money lender to allow you to better understand how to increase your loan worthiness. Always remember that these factors are evaluated to make sure the deal is profitable and secured to both the lender and the borrower. Collateral. What is the value of a property from a sales and/or income approach? Typically, valuations are done through sold comparables, appraisables, and BPOs. Hard money lenders will also perform physical site inspections. Hard money lenders don't use traditional appraisal evaluation based on a 180-day marketability study. That's what banks use. Rather, your hard money lender will want to know how much your property would fetch in 30 or 60 days in the current marketplace. If there is a default and a foreclosure, the lender wants to resell the property fast, get the private investor's money back, and put that money back out into other loans. They cannot afford to lose money in any deal, so they are very conservative in the evaluation of a property. Banks aren't able to look you in the eye and determine your character like in the old days of banking. That's why they had to develop complex credit and income formulas to determine your credit worthiness for a mortgage. Fortunately for hard money lenders, they can look you in the eye, talk to you on the phone, and get a good feel for whether you're a worthy borrower. So for hard money lenders, this is a big factor. Here's some questions a lender will ask you about. Does the borrower have experience investing in real estate or managing rental properties? Lenders are very cautious about high-risk borrowers, such as real estate investors seeking financing for their first rehab project. Does the borrower possess excellent communication skills? Lenders prefer to work with a borrower who is readily available and accessible. A lack of communication in initial loan negotiations represents a caution flag to lenders. If a borrower is not accessible initially, lenders see that as a potential for problems should the loan default. Is the borrower conscientious, reliable, and honorable? The hard money lender will scrutinize each borrower, property, and loan documentation thoroughly in an effort to ascertain that all information disclosed during the application process is legitimate. Therefore, be certain any documentation you provide to the lender is accurate, professional, and presented to the lender in a timely, organized manner. Later, we will explain how to do this. Your hard money lender will analyze your financial abilities to both make any anticipated loan payments and get yourself out of the deal. For instance, if you have a poor credit score and limited income, and you say that you're going to refinance in 6 months, your capacity and your exit strategy will be questioned. Some of the questions you may be asked are: what is your exit strategy? Will you sell or refinance? What is the timeline for your project? Is this project realistic and doable? What is your repayment plan for the loan? And can you verify income, available cash, and assets? The goal of the hard money lender in asking these questions boils down to the following. The lender will want to know that you have the ability to exit the loan prior to approving the loan. This is absolutely critical to ensuring the loan is repaid on time. A hard money lender will often review your credit history, including your current credit score, when assessing your loan request. If you have foreclosures, bankruptcies, liens, or collections, you will be asked to provide necessary background for these items. Your current and past reliability and loan repayment will be reviewed. Hard money lenders do not rely solely upon your credit history to determine your loan approval status, but it does help them to determine your ability to repay the loan and your credit worthiness.